Hey guys, welcome back to the channel. In today's video, I'm going to be providing a longer term market update for Bitcoin, and we're going to be discussing the potential for this most recent drawdown towards the $20,000 region, potentially setting up to be a longer term higher low here on this weekly chart for Bitcoin. If you guys enjoyed the content, make sure to leave a like and subscribe. Also, by the way, I will leave a link to my Twitter page in the description below. Feel free to go ahead and check that out as well. I'm fairly active over there with crypto content. So with Bitcoin, we did see a drawdown down just below $20,000. If I switch over here to the daily time frame, you can see it was a pretty fast-paced move coming off of these highs at around $25,000, correcting a total of around 22%, of which we have rallied and recovered by about 15 to 16%. So this has been a pretty decent setup for a longer term higher low, where we have seen again demand and support coming in at a much higher valuation than the previous lows from back here in November of 2022. And when I go back here to the weekly time frame, you can see that setup. The weekly candle pretty much fully recovered here with only a drawdown by about 1%. And when I'm zooming out here, we could really have this setup of a potential new uptrend where we do see that demand and support rising at higher valuations. Pretty difficult to draw a trend line that captures all of the lows perfectly, but you can see how this is definitely looking different and not the same that we had with the downtrend with these very clear lower highs. So the fact that we're starting to reverse this general direction, the momentum is beginning to work to the upside, all very telling signs here that we're just hammering out a longer term bottom, a longer term basing pattern, and especially if Bitcoin can actually reverse further and continue to make a higher high coming back above the February highs. And that level is currently at $25,300. If we can break above this and make a higher high, then that will make this weekly chart look much more bullish and really give us the momentum to the upside, really define this new uptrend. And it will also come off the back of breaking outside of this range, the one with the support and the range lows at $18,500 and the resistance again around $25,000. You can see how we have been within this range minus the FTX crash for several months now, just sort of oscillating from the range highs to the range lows, completing out that pattern. So if we were to get that breakout above the range, that would be a very significant breakout. It would take us all the way back up to a high going back here to May of 2022. All things that you really just do not see within a bear market. And again, that would just give more confidence and assurance that we have left this bear market trend and have actually formed a new uptrend. Now, of course, we could still have the possibility of coming back down here and basically just retracing the most recent rally. So for example, Bitcoin does actually come back down here into the next few weeks. That would still be fine as longer as we can form some sort of low, some sort of support well and comfortably above the lows back here in November at $15,600. If we can do that, there is still the potential and the setup for a higher low. So something like this, for example, if we were to correct down from here and then retest that, you could still make that argument for a higher low and then eventually look out for a reversal and then an eventual breakout outside of the range. Now, of course, that would just be if we retrace this move. I really don't see that happening just because I think this was mainly fear driven from a lot of the news surrounding the banking system. So the fact that we're actually seeing a little bit of relief here is very promising. And again, I do think that Bitcoin has set up a longer term higher low and that we should now be looking for that range high at $25,000 as a potential point where we could see into the next several months. And again, if we can get that breakout, bringing us up to 10-month highs, then that would be a huge sign that we're actually going to continue to rally. And the next resistance following that would come up here at this level at 30K, pretty much the level that we were familiar with back in 2021. The retest after this peak at 42K, the floor of support that held in the summer of 2021, all of these wicks coming back down, holding it as support. And then lastly, that's where we flipped into resistance on the breakdown just before that final leg down lower to 17.5K. So for example, if we were to see that breakout, whether that's in a few weeks, a few months, or even at the end of 2023, when we do see an eventual breakout above the range, and if we can actually flip it into support on a sustainable move, then I think we could very quickly see a rally, mainly because there's not too much resistance between these two levels. You can see it's been relatively inefficient with any move from level to level being pretty fast paced. For example, on the uptrend, we rallied from $25,000 up to $32,000 in just about 2 weeks, a 27% rally. And then on the downside, when we broke below it, it was really only about 5 weeks to drop 20%. So not a whole lot of price action, not a whole lot of resistance, and this is a relatively inefficient zone. So if we were to see that breakout, I think it could be very quick to see another leg up to that next target. I hope you guys enjoyed the content, and as always, I'll see you in the next one.